Well, howdy there folks, and welcome into today's video. Hope you guys are doing great out there. As always, we have a whiteboard special for you guys here today in which we are going to get into how to maximize your gains in the stock market. I'm going to tell you 5 things in this video, 5 very important things so you can make as much money in the stock market as possible and with your stocks in general. A lot of folks don't know these 5 things, and so they limit their gains in the stock market, and they find themselves in a situation where they're saying, man, I could have made so much more money than I really did on this position or that position doing these sorts of things. So I want to make sure you guys hopefully can make as much money in the stock market as possible, which is at the end of the day the goal when it comes to stock market investing, right? Everybody wants to make as much money as possible so you can live the life on your own terms, right? Have things that you want, be able to do things later in life that you want, those sorts of things. So hope you guys learned a lot from this video. All I ask in return for doing this video for you here today is that you smash that like button. That helps out huge YouTube algorithm. I appreciate you guys. As always, this is going to be a video that helps out the stock market for beginners types folks, as well as if you're an intermediate investor, and maybe even if you're an advanced investor, because some of these things I'm going to share with you are going to be extremely simple things that people aren't doing. Some of these are going to be much more complicated. So I'm going to have a little bit of, in these 5 tips, a little bit that's for like more beginner investors, and some of these that are actually for a little more advanced folks out there. So if you're looking to join my private stock group, the private Discord chat, anything like that, check out pinned comment down there. Also, if you're looking for our group coaching, you want to learn more about that, also check out pinned comment. That will probably be the second pinned comment down there. And without further ado, let's get into this. Alrighty folks, first one up here. This one is probably the simplest I'm going to give you of these 5, but this is arguably the biggest of the 5, okay? And it is hold. If you want to maximize your gains in the stock market, hold. This is extremely important, okay? If you own a truly great stock, you've put in all the research work to that stock, you've done all the study on that stock, you understand inside and out, you believe so much in the business model over the next 5, 10, 15, 20 years, you've done all that right, you've invested your money, hold, okay? Very key for several different reasons. You don't part with great assets. Great assets, you don't go and ditch those, okay? That's just the bottom line. I've made this mistake a lot of times in the stock market where I would buy into a great stock and I would make 40%, 50%, 60% on that stock, and sometimes a very short amount of time. And sometimes I would sell that stock, take the short-term gain, and for what? If it's truly a great asset, it's not worth parting with. Bottom line, think of it like if you were a real estate investor, right? And you owned a great cash flow property that got you great rent and the property was always appreciating, right? Why would you part with that? It doesn't make sense. But in the stock market, because the stock market's open on a daily basis, it's so easy to sell out of an entire position. Whether you got to sell out of 100 shares of a stock or 100,000 shares of a stock, it can happen within a millisecond, right? And it's so easy to make that decision. And so a lot of times we go ahead and we'll sell out of a great stock, a great asset. And it's usually just a very, very bad decision. Hold, okay? Think about Amazon for the past 20 years, right? You could have bought, let's imagine you bought Amazon, let's go back 20 years ago, okay? You bought Amazon in 2001, right? You had all these time periods over the last 20 years where you could have sold, right? You could have sold in 2003, you could have sold in 2006, you could have sold in 2010, you could have sold in 2015, you could have sold in 2020 last year, you could have sold this year, right? All along, it was always a horrible decision to sell. Amazon's a great company that has an amazing future in front of it. So to get caught up into whether it be valuations at a certain time, whether it be macroeconomic things, whether it be recession worries, anything like that, just not worth it. Because especially when you start making those short-term decisions, it leads to more short-term decisions, and then you start kind of doing more trading activity rather than focus on investing in great assets, okay? The last 20 years, it was always a bad decision to sell Amazon, okay? Tesla. So Tesla, my Tesla. This was obviously a stock I talked about all the time on the YouTube channel back in 2019, right? And you know, a lot of folks got in Tesla stock. Well, the problem with Tesla stock was when it first made its first big run up, right? And it ran up 30%, 50%, 70%. A lot of people cashed very early on Tesla. And for what? If you believe this was going to be a $100 billion company or a several $100 billion company, why cash out after it made its first, you know, bit up there? It just doesn't make sense. But what happens is people all of a sudden see gains and then they're like, oh my gosh, I just made a bunch of money. Let me just cash out now. Once again, if you own a great asset, you don't just get rid of it, right? It's like, I mean, imagine you got a great dog, right? And this dog is such a perfect dog. And you're like, oh, I'm gonna get rid of that. I'm gonna get another dog. Like just doesn't make sense, right? Oh, you know, I got great family members and friends around me, but let me just get rid of all my great family members and great friends that support me. Like, it just doesn't make sense, right? And so, but with stocks, people think like that. Like, oh, I just made money from this. Oh, let me cash out. And it's just like, if you own great assets, great stocks, you gotta stick with them, okay? Taxes, another reason why you wanna hold. The whole tax system is rigged in the favor of long-term investors versus short-term people that are making short-term decisions around stocks. You make those short-term decisions, be ready to pay a lot bigger taxes, okay? Versus holding long term, you're taxed much less, okay? So overall, moral of this first story is hold. If you own truly great assets, you hold them. If you're day trading, something like that, or you're trying to, you know, just gambling around with stocks, like you're like, oh, I don't know, the stock might go up. I heard it's a meme stock, it's got the hype or something like that. You know, I can understand maybe getting rid of those, but when you're buying truly great companies that you believe in for the next 5, 10, 15, 20 years, you hold those babies and you don't part with them. Let's get into number 2 of these 5. Alrighty guys, second way up here to maximize gains with stocks. This one's a little more complicated, okay? That first one was simple. This one's definitely a little more complicated, but it is by writing or selling put options. And let me give you an example of this. I like to explain options sometimes with a real world example because I feel like it's a little better to teach that way rather than a way in which, you know, you just read off a definition or something like that. Because if you read off the definition of a strategy like this, I would say 95% of people are going to be very confused. But if I explain it with a real world example, I think a lot of you guys are going to understand it, okay? So there's a stock, obviously, I talk about a lot on the channel over the past several months, Tattooed Chef, right? TTCF. So let's say, you know, I'm obviously a huge believer in Tattooed Chef long term, right? Let's say essentially I want to make some money by essentially writing some put options. Somebody else is going to bet that Tattooed Chef is going to go down, okay? So let's say Tattooed Chef is trading at $20 a share here today, right? And let's say I want to go ahead and sell a $20 strike, okay? So let's say it's a $20 strike price, right? And let's say I can collect $2 of premium. Now, something important to remember here essentially, okay, is each option contract basically holds 100 underlying shares, okay? So let's say I write one put option contract here and I'm gonna collect essentially $200 in premium, right? Because if you times this out, the $2 premium I get times 100 shares, I'm at $200, okay? So I get to go ahead and collect, just for writing one contract, $200 in premium, okay? $200 in premium. Let's say these expire in 1 month from now, okay? And so this person that's buying these put options, they believe Tattooed Chef's gonna go down a bunch in the short term. So they're essentially placing a bet here that they think Tattooed Chef's gonna go down below $18, right? That's what they need, because $18 is their break even. They're at a $20 strike price, $2 of premium they paid, so they need the stock price to go down to at least $18 within the next month, right, to start making money. Now, if Tattooed Chef goes to 16, they just doubled up their money, so they're looking really good, right? Now, me on the other hand, maybe I think there's a low probability that Tattooed Chef's gonna go down that price in the short term. So I can go ahead and sell put options and collect this premium here. Now, I don't have to just do it for one contract if I don't want. I could do it for, let's say, 5 contracts. So if I also sell 5 contracts, 5 times 200 now we're talking about I just made $1,000 of premium. Now, the beautiful thing about this is I love Tattooed Chef stock. I am willing to buy more shares of that stock. So let's say, worst case scenario happens here, Tattooed Chef goes down a bunch. Let's say over the course of next month, Tattooed Chef goes down to $16, okay? So this hurts because now I'm in a situation where I lost my premium. But on the flip side, I get to buy shares of stock at $16 a share. So not so bad. So the risk reward for me was worth it because one, I didn't think the stock was gonna go down to 16 or anything like that, or even below 18, right? So I thought there was a low probability of that happening, right? But even if that happens, then I just get to buy the shares of stock for a whole lot cheaper, right? Because now I have to, you know, fill that obligation there, right? And so from my perspective, as somebody that's a long-term shareholder and believes in certain companies a lot, if there's a stock I feel is very, very undervalued already, And I think there's a pretty low probability it goes down a bunch more. But I'm willing to buy the shares if it does go down a bunch more because I love that stock for the long term. This is a strategy that can work really well. And I can collect my premium, right? And like I said, worst case scenario goes down a bunch. I get to buy a bunch more shares for a much cheaper price, right? Of a stock that I love for the long term. Best case scenario is essentially where the stock doesn't go down and I just get to collect that premium there, and I collect that premium again and again and again and again, and then eventually it will work against me, and eventually a stock's gonna tank that I do this on, right? And it won't go my way. But then I get to buy shares of a stock I love for the long term, just at a much cheaper price. So for somebody like myself, this is arguably the number one or number two best option strategy I can possibly do. I don't do this strategy very often because I'm extremely limited on time, right? I run the YouTube channels, then also I have a team, and then I also have my private stock group and the private Discord chat to run, and I have a family, and I have like a million things, but I've actually honestly thought about just having somebody that I pay a commission to that basically just does this to, for me all the time in my portfolio, because I think I can make probably between $500,000 and $1 million a year, just basically implementing the strategy and doing this with stocks I absolutely love, okay? And this is something you can do with your portfolio. And I have friends of mine who make like 4% in a week, 5% in a week, 6% in a week. And I'm not even talking about months, in a week, just doing the strategy with stocks they love, that if it was to go down, they'd be happy to buy for very cheap prices, but most of the time it doesn't go down. And most of the time, they get to collect that premium and collect that premium and collect that premium and watch their account build and build and build. And then the one time it goes bad, they get to just buy that stock for a much cheaper price, okay? And this is one of the most attractive option opportunities out there in the stock market for folks like myself that are longer term investors and more fundamental driven folks. And these people are usually the people that actually make money in it, okay guys? So very, very important, okay? So that was the second of these five. Let's get into 3 of these 5 things so you can maximize your gains in the stock market. Hope you're enjoying this, by the way. If you didn't already smash, make sure you do it. Did you subscribe yet? Alrighty guys, the third way of these 5 to maximize your gains in the stock market, extremely simple one here, okay? Extremely simple one, not a little more complicated like the last one, is don't be weak sauce, okay? This is actually really, really key. This has happened to me in the past, okay? This happened to me actually with Tesla stock. I went way too weak sauce into it, meaning I didn't buy even remotely close to how much I could have bought in that stock, okay? This doesn't mean if you see a stock you really love and you really believe in, let's go all in or something like that. But there's a difference between, like, let's say you really, really believe in a stock a lot, right? You put 1% of your net worth in it, okay? Is that really going to change the game for you? Probably not, right? And so what I like to do is, if I really truly believe in a stock a lot, I like to put anywhere from 5% to up to 15% of my net worth in that one stock. Now, back in the day when I had a lower net worth, I would even do like 25% of my net worth into a stock, okay? Nowadays, I take a little less risk. I'm in my 30s now. I like to take a little less risk than I used to, okay? But needless to say, I'm still gonna move my net worth if I'm putting 5 to 15% in a stock I really believe in, right? And Tesla's a stock, a great example of a stock that I just didn't buy heavy enough. I believed so much in that company. The company was so undervalued. I was buying that company. It was like a $30 or $40 billion market cap. It was being hammered by tons of negativity in mainstream media and just in the media in general. I looked at the business model. I'm like, oh my gosh, this company's at the forefront of EVs. This huge opportunity, autonomous driving. They have the international expansion. And I love this company so much. And I bought a decent position in it, a decent position. But the problem was, of my net worth, I probably put less, actually I know for sure, I put way less than 5% of my net worth in Tesla stock. Now the stock still ended up gaining me about 7 figures or so, but it wasn't nearly what it could have been. I went too weak sauce into it, and I believe so much in that company. I would talk about it on YouTube all the dang time back in the day, right? That's how much I believed in it. But I went too weak sauce, and I believe I ended up going less than 5% of my net worth into that stock. It still made me, a ton of money, and I'm super fortunate for that. But the fact is, I did not go heavy enough into that company. And you don't want to stick yourself into a situation where, you know, all of a sudden you're looking and you're like, man, I believe in that company so much, and I put like, you know, 2% of my net worth in it or something like that. Because then you look back and you're like, why didn't I buy more of that? Now, with that being said, like I said, you don't want to go overboard, right? Where you're all of a sudden your entire net worth's in a stock or something like that, right? For every one story you hear about where it's some guy who made a ton of money and put all his money and maxed out his credit cards and went all into some crypto or stock or something like that, believe me, there's a lot of stories where that didn't work out, okay? So that's very important. You don't want to go too crazy with it, but don't be too weak sauce. You got to find that right balance for you, okay? So that was the third one, a simple one up here. Let's get in the fourth one. Alrighty, folks, the fourth of these 5 ways on how to maximize your money in the stock market. This one allows you to essentially leverage your money a bit, okay? And potentially get much more outsized gains as a long-term investor, right? And this is buying long-term out call options. Now, when it comes to options market, you can do a lot of different option strategies. You can buy options that expire in a couple days from now, a couple weeks from now, a couple months from now. But in terms of me, for my long-term strategy, when it comes to call options, what I like to do is I like to buy ones that are several years out. This allows me to essentially have much more upside potential in a stock than if I just bought that stock straight up. Now, I do take absolutely more risk in this, because the risk is when you buy long-term out call options, let's say things don't go the way I think they're gonna go, right? And all of a sudden that strike price isn't hit. All of a sudden I could potentially lose 100% of my money. That would be really bad. But the high majority of the time, I am correct on my stock price predictions, especially if you take it over a couple years, right? I'm not the best at predicting where stock's going tomorrow or next month or next week or something like that. But over the course of 2, 3, 4 years, I have a very successful track record, right? And so for somebody like myself, long-term call options can be a great way to actually, with limited capital, be able to get even much more outsized gains, okay? Now, in September 13th, 2021, it's a big day. It's a big day, and that's a big month for me personally. And the reason is, on that day, 2024 call options are going to start to be released, okay? And so during the month of September, I am going to be very busy looking at call options and what specific call options I want to buy, what stocks I want to buy, what strike prices I want to buy, what premiums make sense, all that, okay? And so this is going to be a very important month for me, because then I'm going to be we're talking about I have 2 years and 4 months, 2 years and 5 months to play with for my bullish strategies on certain stocks to work out, right? Remember, I talked about Tattoo Chef. That might be definitely a stock I'm looking at for potentially 2024 call options. Wynn Resorts might be a stock I'm looking at, and there's a lot of others out there that I'm going to be looking very closely at to buy these call options. Once again, this allows you to hopefully get much more outsized gains, especially if you start going outside the money, right? It absolutely is more risk, because if you're wrong on that, you can lose up to 100% of your money. So you can't, forget that part, right? But for somebody like myself that is pretty dang good at this, at picking stocks that are going to go up a lot over the next several years, this is a great strategy for me. The more time I have, the more confidence I have. The less time I have, the less confident I am. Now, very important is, when it comes to call options, I'm never willing to risk any more than like 1% of my net worth on a given option play, okay? And even if I was to do 1%, that would be a stretch for me, okay? That would really be a stretch. I'm trying to always keep it under 1% of my net worth for a particular option play. Although I'm super confident and I think I can make a ton of money on it, it does not mean I'm gonna risk the farm, because once again, when it comes to buying call options, there always is that risk that you could lose 100% of your money. Now, the other beautiful thing about call option strategy like this is I don't have to hold these till January 2024 if I don't want. Let's say I buy some call options here. Let's say in Corsair Gaming, right? CRSR, right? Stock I feel is very undervalued. Let's say I buy $35 strikes, right? Corsair has recently been trading anywhere around, I think around $31. So let's say I buy $35 strikes for Corsair Gaming. Let's say they expire in January of 2024, right? Jan 2024. Well, here we are in a situation where, let's say I have to pay $5 premium, right? I don't know what I would have to pay for the premium on that, but we'll see in a couple months when it comes out, right? Let's say it's $5 premium. Now in this situation, if Corsair Gaming goes to all of a sudden, $60 or something like that by January 2024, I'm looking really good. But here's the thing. Let's say Corsair Gaming goes to $60 and it's only January of 2022. Let's say, you know, Corsair goes on a huge run, which is always a possibility, right? The, you know, sales all of a sudden come out, they beat expectations. All of a sudden the big fund, the Eagle fund, you know, isn't really selling shares, and maybe you get another hedge fund to buy in or something like that. All of a sudden the stock shoots up huge. Like it's definitely not out of the realm of possibility for that stock to also shoot to like 60 bucks, let's say, for instance, right? And let's say it's $60 in January 2022. Now we could be in a situation where I'm like, man, this stock just went on a crazy run. That premium, if we're talking I bought in September of 2021, $5 premium, I mean, we're talking about, gosh, that premium would then probably be selling for, I would say, around $50. I think you would have to pay probably $50 in premium, maybe even more than that, which means I would have just essentially 10x'd my money, right? Now, I just 10x'd my money. For me, it might make sense to, let's say I bought 10 option contracts, it might make sense to cash out half those. It might make sense for me to let the other half ride, or it might make sense for me to just be like, you know what, I made a lot of money on this, let me cash this, let me go into something else, right? Or maybe I just want to hold it, right? But the great thing is I can always decide to sell that to somebody else. If I made a ton of money on those, I can go ahead and cash that to somebody else. I'm like, hey man, I just 10x my money, let me go ahead and sell out of these and cash to somebody else, and then they can take that risk with, you know, the stock and where it goes over the next, you know, couple of years. And or I can just take that money, cash it, sell it to somebody else, and then buy Corsair shares straight up. So then I'm not putting myself into this risk situation like, well, what if the stock still goes under the premium or something like that, right? So that's the beautiful thing about this. But once again, the risk is if it doesn't hit that strike, right? Or let's say it's just under, you know, $40, all of a sudden I lose 100% of my money, right? That would be, you know, not a good situation, obviously, right? Well, technically not 100%. It would need to be under 35 to lose 100%, but no matter what, under 40, it would be a bad situation, because if I tied up money for all those years and didn't make money or lost all that money, that would be rough, right? So that's the fourth one of these 5. Let's get into the last one, number 5. Alrighty, folks, I hope you enjoyed this video so far. Let's get into the last one, number 5. This is an extremely simple one, okay? On how to maximize gains in the stock market is reinvest your dividend money. Some folks, they don't reinvest it. Now, when I say reinvest your dividend money, you do not have to buy the same stock with that dividend money. You don't have to buy, let's say you make dividend money from, I don't know, let's say Coca-Cola stock, right? You don't have to necessarily use that money to buy more Coca-Cola stock. You could just use that money to buy another dividend stock or just another stock in general. So the money can keep compounding rather than some people, like, let's say they make $100 a month in dividend income, or let's say $1,000 a month in dividend income. Some people will go ahead and take that money out and buy stuff with it. If you understand compounding and how compounding works over time, it is best to reinvest that money so you keep building bigger and bigger and bigger, and the amounts of money you're making and those dividend payments get bigger and bigger. Back in the day, I was so thrilled if I made, you know, a couple $100 a year in dividends, if we go back over a decade ago, right? Nowadays, I'm fortunate that this year we might cross, I don't know, maybe we hit 6 figures in dividend income this year, which I've never done before, right? And so it's all about building bigger and bigger and bigger, and reinvesting that dividend money, which is essentially money that's paid out to you as a shareholder of that stock, is a beautiful, beautiful thing. So you want to definitely make sure you take advantage of that. Hope you guys enjoyed this video. As always, make sure you share this out with anybody that you think is a friend or a family member that would enjoy a video like this and learn a lot from it, guys. I appreciate you being here as always. If you didn't already get to smash that like button, I would help out the YouTube channel in a massive way. I appreciate you. Don't forget to subscribe. If you're looking to join my private stock group, the private Discord chat, all those sorts of things, you're looking to take your investing to the next level, definitely check out pinned comment down there. Thank you for watching and have a great day.